Welcome one, welcome all to Life, Liberty, and Liquidity. I am Mike. I'll change my name. It's still saying Veteran Crypto. We got our guest TJ in the top left, Taylor in the top right, and of course Jeff in the bottom right. How y'all doing this evening?
Doing great. Thanks for having me.
Good.
Absolutely, absolutely. So, yeah, the topic tonight, we're just going to go ahead and jump right into it. But the topic tonight, we're just going to talk about DeFi, TradFi, and the RWAs, the tokenization of real world assets, and just how it potentially is going to reshape the financial sector. And we all kind of have our own angle on it. TJ, of course, I definitely want you to introduce yourself and tell us a little bit about you. But he has a multimedia company, very very large YouTube family of channels. Taylor, of course, as you all know, from a legal standpoint and from a real estate standpoint, very knowledgeable, has recently got into DeFi and starting to wet his whistle on that. Jeff, licensed financial advisor for a very long time, and I'm beating him up daily trying to get him to learn DeFi.
He really is. It's a whip.
All right, but you like it. You like it. You're a freak like that. so TJ, tell us a little bit about yourself, because I mean I know you, but I definitely want the audience to get
Sure. Yeah. My name's TJ from Discover Crypto. Like Mike mentioned, run a lot of different channels. You guys might know me from Blockchain Basement, also pop up from time to time on BitLab Academy, but been in crypto since about 2017, pretty close to full time, or as much time as I could spend in 2018 while working another job. And then just dug in, learned everything I could about. It was really Ethereum that first got my attention early on as a smart contract platform. So I was always fascinated by what was going to be possible with smart contracts, and also went down the Bitcoin rabbit hole, Sound Money, and read every Bitcoin book I could get my hands on. Learned all my Bitcoin history. Watched a lot of Andreas Antonopoulos. And got really into, I was already had a background in real estate actually. So it was already predisposed to, hard assets, and, Bitcoin was just kind of like a better hard asset for a lot of different ways, in my opinion. Got super into it, started making content full time, went through the 2020, 2021 bull cycle, took profits, bought some real estate.
Nice.
Now trying to sell the real estate, get back into crypto, back into Bitcoin. So I've been on quite the journey of altcoins to Bitcoin. I say I'm maximalish in the sense that I'm not a maximalist, but I'm definitely very much pro Bitcoin. And then I use altcoins to get more Bitcoin. And I have learned, if you're going to hold anything for the whole time, it's basically Bitcoin. Everything else, you're speculating. But yeah, I've been having a lot of fun with the DeFi stuff lately, like you guys have been, Mike, and learning about, concentrated liquidity pools and, the correlation, but, using correlated pools versus dollar-based pools and all that sort of stuff. So been enjoying that. And I think that a part of that is what drew me to. I had some rental properties, and it's like you look at what you've got sitting in them and what you can make on DeFi.
Yeah.
So a lot of that has been like, okay, no property tax, no insurance, no tenant, no landscaping, like all this
liability.
Yeah, all this stuff that you have to deal with houses, and you can kind of scale it so much easier. It's easier to do remote. So yeah, I've been kind of unwinding some of that sort of stuff, selling the real estate and getting back into just, really playing with DeFi and just kind of starting. A lot of it has been in testing mode, but I'm ready probably this summer to really start ramping it up. But yeah, excited to be here. Thanks for having me, and
absolutely,
part of the conversation.
No, absolutely. Well, Taylor, that's actually a nice segue, because you're somewhat. I mean, you're not new to crypto, but you're new to DeFi, and I know that you've gone in pretty deep recently. So why don't you share your experience with? Oh, there you go.
Yeah, I got all my tracking going on. Like I like to write down and like, okay, am I actually making money off this? Is this real?
Yeah. Well, tell us about your experience so far, because I know that I when I was down there visiting, I planted that seed, and I was like, hey, check out these plume pools, and you were like, you're making 3% a day, and you jumped in, and yeah, you just gone like balls deep now.
Yeah, well, I started about a month ago, but I really started tracking. So just since the 15th, I had about 190,000 in now. Now I'm about almost to 200,000.
So, yeah, so like what about a month?
Is this real? Like, can this?
Am I going to cash out? Am I going to be able to take it out?
I know, like, and so I have taken it out like to see if they actually give my money back. Like,
Yeah, yeah.
I think it's like, oh, this is going to be fake or something, and so, oh no, they do give you your money back. Like, it is pretty sweet.
And the key is like for me is I stick to the major platforms.
Mm-hmm.
I stick with Aave, I stick with Uniswap, Aerodrome, places like that.
Yeah,
Because when you start, chasing those APRs and going, into those, down the rabbit hole too much, to me it feels a little too risky.
yeah,
I would rather just get, you know, good double digit, APR, which is awesome and nothing to scoff at,
yeah,
and have the peace of mind of knowing when I wake up in the morning the platform's still going to be there. You know what I mean?
yeah.
Yeah,
No,
it's all risk reward in my opinion. That's what I was like. I've seen a
Mm.
lot of people, you can, like you said, go chase those things and then they get wiped out. And if they're only dealing with 500 bucks, 1,000, 10,000, that's one thing. But when you get to some of those larger numbers, like you said, it's just not worth the risk
No.
of putting $200,000 on a platform that may have a compromise in a week, or, that just came out 2 weeks ago and all the volumes racing over there. So the yield is great, but you might be risking the whole thing. I've known, and even ones that are reputable now, like things like Pendle that were coming up. Like I remember when they were brand new, and it was like, yeah, but let other people test it. I don't care. I don't need to
Yeah.
be the one in the first 6 months that gets the most. If it's legit, like you said, I'll wait and get some of those good, healthy double digit rewards and stick with that, and then keep compounding it. And like Taylor said, like you just give it some time. Like, is this real? Is this real? Because if this keeps happening,
Yeah.
this is going to be great.
Yeah. Yeah. No, and honestly in DeFi, I mean, to me, slow and steady wins the race.
Mhm.
When we start chasing those high yields, it's usually in highly volatile assets,
Mhm.
or it's in a sketchy, new platform that, may or may not go under. And a lot of people will chase APRs, and kind of close out this on that. They'll chase APRs, but they won't pay attention to KPIs like like TVL, total value locked,
Mhm.
and so they get hit with slippage because maybe there's not a whole lot of money in the pool, and when they go to enter or exit, then they get hit with slippage, and they or they can't get out because they have to bump up the slippage so much, or there's no volume. So if there's no volume, there's no fees. If there's no fees, you're not getting paid. So yeah, there might be a high APR that when somebody does do a swap occasionally, you get a big chunk. But if it's not consistent, what's the point?
Mhm.
So
absolutely.
Jeff, I know that you haven't done any DeFi, but what is it that piques your interest about it as a TradFi guy?
So I put like a good straight 10
And I'm
minutes of
and,
thought
and
into
I'm
this.
judging you with my eyes right now.
I know. On my way. So I got two comments to make that I think fit really well. It's gonna be really impressive for like 3 minutes, and then the rest of the show, I'm just gonna be completely winging it. But there's two things on this. So I was thinking about DeFi and crypto in general, and it very much reminds me of the speculators and the prospectors of the gold rush
Mm,
era, right? Kind of like kind of Tombstone, right? And what I mean by that is you could come and make your fortune, right? You could be a Sooner, you could be you can go all the way to the California and go pan for gold or whatever, start your mine, but you could also get shot dead in the street, and it really literally was the Wild West.
yeah,
Which if you looked at the negative of that, you would never have left the safe haven of the East Coast, basically, right, of civilized society, and would say, well, no one can make any money. But on the flip side, if you look at only the people that hit a vein of gold, you also probably are skewed to the positive, right? And so the thing that I think is interesting about DeFi currently, not where it's going to end up, but currently from what I've seen from you, what I've seen from Taylor, a little bit that I've started to read and get into, is it feels like there's a saying, if you wanted, the people that got rich during the gold rush weren't the prospectors, so
the
they
picks and
was the
shovels.
guys selling the picks and the shovels.
Mhm.
And DeFi feels like picks and shovels,
That's
Mhm.
right?
exactly what it
And it
is.
feels like picks and shovels when there's a shortage of picks and shovels. And the reason I say that is this APY and everything you're talking about, APY, percentage rate and percentage yield, these returns. I've seen this in my own industry. So when I first came, I've been doing this since 1999. But I got friends, that have done it from the 90s and the 80s and a few mentors beyond that. So to
Back in
give
the
you an idea, like in
1900s.
1995, 94, if you went in Edward Jones or Merrill Lynch, wherever, and you wanted to just buy a mutual fund, you walk in the door, can I have some help? I want to buy a mutual fund. You put $10,000 in the mutual fund, the standard normal, unless you had a whole lot of money, the way they would do that is what's called an A share, a front end load. So you put your 10 grand in and the load was 8 or 9%, meaning you put in 10 grand and you got a statement the next day when you logged in, depending upon how late in the 90s we're talking about, your account was not 10,000, it was 9,100. And nobody batted an eye. That was how business was done. Fast forward to when I started 2009, load was 5.25%. Now, in the last 8 to 10 years, the shift has been to no load, no upfront commissions. Mm-hmm. Most people of either that have wealth or are working with advisors that have enough experience are not even dealing with advisors that do commissions at all. It's just a managed money fee, whether it's a flat fee or percentage of money, whatever. But it's not these upfront things. So the reason I tell you that story is I was talking to somebody about this the other day, and he was like, "Oh, my first year just opening accounts with, you could meet just mom and pop, open $5,000 accounts at a time. You open 2 $5,000 accounts a week and you're making $1,000 a week doing no work at all, right? You open a $100,000 account, you're making $10,000 a week. So this DeFi return will, if the adoption of crypto happens the way you guys all hope it does, and I certainly have a view and hope it does, these things will absolutely be compressed. However, that's sort of like, but that doesn't mean
now what do you mean by compressed? That
what I mean
by the APRs will go down, stuff like that?
I bet you the AP, I have no idea the acceleration, but the yield you're going to get from doing the kinds of DeFi farming that you're, whatever, yield farming or whatever it's called, that you're doing right now is, I bet you it's literally a tenth in 5 years or 10 years. So
that was exactly my number. 5 to 10 years. It's going to be commoditized, basically. I mean,
100%. So my point is, if you go to California now,
right,
you go break. You go broke trying to sell shovels because you can go get a shovel at every Walmart and Home Depot, right?
Yeah.
So I think there's two things to look at. I think there's the sort of the future of smart contracts, a digitized world. Maybe one day, having currency, maybe it's Bitcoin that's separate from the debasements of fiat, all that stuff. Like, I think there's sort of the cryptocurrency argument, sort of value argument. There's the DeFi as a future-proofing way of doing business in an ever more fraudulent world, and then there's the current and short-term to intermediate term DeFi as it's an investment game all unto itself. And I'm saying that those three things I think are getting convoluted a little bit with the average Joe. And then the other thing I wanted to comment on, I saw a graph today, and it was interesting because people talk about how Bitcoin, I'm not saying this is, you hear this, at least on my world, Bitcoin is digital gold.
Yes.
Right? Or that's the analog is to gold.
Exactly.
This year to date, Bitcoin is the best performing asset if you don't count gold.
Right.
So it's still down. It's not as down as much as the market. It's not down as much as the NASDAQ. It's not down, certainly not down as much as Tesla. But it's still down. It's still trading like a market, like an equity.
Yeah.
Whereas gold's up 25%. And I think why that's important is, so it has not reached that status, at least in mainstream finance yet. 2, that's where the return, it's going to be the shift from being treated like an equity, if it's successful, Bitcoin specifically, to being treated like gold. When Bitcoin and gold start moving in lockstep, even if that's when you're going to know. I think that's going to be more towards the end. That's the maturation of this cycle, right? And I'm not talking about this current cycle, but I'm talking about the super cycle of Bitcoin becoming its own full asset class in the world.
So you mean like Bitcoin and gold becoming more correlated?
Correct. I think the more Bitcoin becomes more correlated, will be directly correlated with lower and lower subsequent returns percentage wise.
Mm-hmm.
You know what I mean? Because obviously going from 15, a year and a half ago to 100 is a 6x. You got to go from 100 to 600 to
Well,
replicate.
I've been actually saying this for a while, is that I feel like that because of that crypto in its entirety has such a, I mean, it's just shy of 3 trillion. And I mean, that seems like a lot to a lot of people, but for an entire market, that is minuscule.
Yes.
And it allows for a lot of manipulation, especially now that institutions and governments and stuff are starting to get involved, and they're throwing large sums of money around. It used to be just retail, people like us, but with the legality starting to get dialed in, you're starting to get a lot of money flowing in, and you can watch it. They just liquidate people all day long. This windshield wiper is what Josh calls it,
Mhm.
where they'll go up and they liquidate the shorts, and then they liquidate the longs, and they just rinse and and they just yeah.
So Breezy asked where I was doing. I was DeFiing Plume, and that is on Uniswap right now. And it's making me off of 30 grand that I'm doing. It's making me about $75 a day,
Nice.
which is it's not going to last until when more people jump on and start doing it. But right now, it trades
That's about
consistently.
8% a month, though.
Yeah.
Oh
So
yeah,
what is it paired with anything, or is it just stakes Plume, or what is it?
with USDC. Yeah.
USDC
Yeah,
Plume? Yeah, nice. Yeah.
yeah, it's
Uh,
that Uniswap. It's that Uniswap pool that I'm always talking about, TJ.
but
I have
then
a question for TJ, though, or at least maybe to bat the ball back to him. Um, I feel so as someone who deals with retail public all the time,
Mhm.
right? One of the things that I think the crypto world right now is very bad at, but it's because it's like if you've ever if you've ever seen a bunch of Star Trek or Star Wars or whatever, like Comic Con type geeks, they'll start getting arguments and talking in Klingon, right? I
Yeah.
mean, I had for a while, I got really into. I didn't get into, but I got referred into
Right.
a
Yeah,
group
right.
of network engineers, right?
Okay.
Like people that worked at like Cisco and
Right.
Nord, right? And you go to they invite you to lunch, and then they're having a conversation with another systems engineer, and it's like they're talking in code from like a Cold
Yeah.
War movie,
Mhm.
right? So then you go to me, and the reality is the vast majority of the wealth in this country is held by the top 1%. It's really the top 10%. It has 85% of the wealth. And the vast majority of that is people north of 50. And they don't understand a word of this,
Mhm.
right? Now, eventually, we all keep getting older, hopefully, knock on wood, right? And certainly the generation coming behind. But I think a huge, huge barrier is you talk about yield farming and staking and pairing and gas, and everything is so foreign. And you got to realize that I choose not to use words like tax deferred and correlation, even sometimes when I'm talking to millionaires, because they're not financially savvy. They made their
Sure.
living, they own 3 plumbing
Right.
shop, or they're a fantastic pharmaceutical sales rep, and they're not in this world at all, and that scares them. DeFi and crypto, for a lot of
Oh,
people, they feel like they're one click away from accidentally
dude.
sending their money to North Korea.
I
Yeah.
was before I got into it, I was looking at DeFi for probably a year, and I just kept running into these nebulous terms like impermanent loss and divergence loss, and so I was just confused. I'm like, am I going to lose all my money? And so I started watching a couple of channels and decided, you know what, screw it. I'll throw a couple $100 in. If I lose a couple $100, whatever. And started playing. Just got a wallet. Injected some liquidity into a pool. Started making some money. Added a little bit as I built my knowledge, and it ended up working out for me. But well, real quick before, 'cause, I mean, I know we're kind of short on time when I know TJ has to go here in a little bit, but um, TJ, kick us off on the topic of where you see tokenization of real world assets or RWAs, how you see that rolling out into the future. Because I know that you have, through Josh and just, being where you're at, and having your finger on the pulse of the market, in DC and legislation that's being drafted.
Mhm.
Where do you see tokenization going? and how do you see the roadmap of us getting there?
Yeah, that's a great question, and I'll even tie it back to what Jeff was just talking about. Time.
Perfect.
So when I first got into it, I was talking about smart contracts earlier. I was all excited. I understand, like the concept that clicked in my head was like, okay, every time somebody downloads a song, they're paying 99 cents, but a piece of that 99 cents, you got 2 cents going to the writer, and this much going to the engineer, this much going to the label, this much going to the artist, this much going to the producer. Like imagine if all of that could happen in that one click and it instantaneously went everywhere. And that was like, oh, I could see how this is going to speed up the world by, you know, forget 7 to 10 business days, by like 30 days. It's just going to speed up finance, So, and then in my head, in my naivete, thought it was all going to happen in the next couple, like in three, by 2020, they're going to have this figured out, back in 2016, 2017. Well, by 2020, they kind of had some okay wallets, and they had just figured out liquidity on a dex, like with Uniswap was the first one that had kind of cracked that, because first when dexes came out they had no liquidity, so it's like my brain of how fast it was going to happen was way ahead, kind of to what Jeff was just talking about. Nobody in the retail world, for the most part, that don't, like there's retailers like us that are the early adopter retailers that eat, sleep, and breathe this stuff every day, but the average multimillionaire or millionaire, like Jeff said, they're not going to be doing any of this stuff. They're going to pick up the phone and call their person who does it and says, hey, can you give me some exposure to X? And so even getting there has taken years and years and years. And we're just now passing the laws. Trump signed an executive order on one of them, and we're passing this stable coin bill act that's allowing the Federal Reserve has finally just withdrawn their guidance for banks on how to handle these things, and that they're finally clearing the regulatory pathway for banks to get involved in this stuff. But to his point, it will get the yields we're partaking in now will get commoditized down. But I do think it's going to take longer than people realize, because this system moves so slow. It probably will. I say 5 to 10 years as well, but it'll probably be closer to the 10 than the 5, because all these systems have to get set up, and the bigger the money is, the slower it moves. Now, when it moves with conviction, and the returns are going to be noticeable, but they're not rushing in. They're not testing this stuff. So that for me was one of the biggest learning things of whatever ideal version you have in your head that's possible with this technology. It is possible, but it's going to take way longer than you think it is. Whether you're talking about NFTs, whether you're talking about smart contracts, whether you're talking about, sound money. And, we're finally getting there with Bitcoin, with being a store of value and seeing sovereign wealth funds hold it and all that sort of stuff. But even Bitcoin DeFi hasn't gotten to where it needs to get on a technological level. So the best comparison I have, obviously, is comparing it to the internet, and then when people thought in the 2000s or even in the late 90s, .com, that a website was revolutionary and this was the peak for the internet. And then we hadn't even touched social media yet. And then social media comes along, all this, and then the cloud and gaming, everything, the internet is still kind of evolving in creating new trillion-dollar industries every day. I think this is going to work similar within the finance industry. And it had been regulated to not a lot of competition through regulatory capture in a lot of ways. And now for the first time, there's like competition in finance. There's not just 4 giants that own everything and don't really have any motivation or incentive to move. Like, now every, banks are tech companies. And so to long story short, I do think now that banks are going to start participating in it, they're going to start offering 3%, 5% on savings accounts. And then they're going to turn around and start doing it. And brokerage accounts are going to start getting involved. But it's not the average multimillionaire. They're not going to necessarily be getting 10% a month, but they're going to be able to easily get 15 to 20% a year through different vehicles. And that's still going to compound out and compound out. So, yeah, I'm really excited about the future of DeFi, and as all these ETFs and new exchange products, and again, Schwab's getting into it, and all the big, the people that have been, Fidelity's been into it for a long time. They just like to pretend they weren't. Morgan Stanley, a lot of those guys, they've been trying to lay the railroad tracks first before they call all their clients and say, hey, let's go. But I think I'm biased, I'm the mega bull, but I think this wave that we're about to see over this summer and through next year is going to catch a lot of people off guard.
What I want to comment on that really quickly because I was actually thinking about this when I was first getting the business. A friend of mine's, one of my really good friends, his brother-in-law was deep into Quickstar. Do you know what
Mhm.
Quickstar is?
I
It's
mean,
like
it sounds familiar,
it's
but
basically Amway online.
okay, yeah,
Right. So way back then, you would go like I would have a Quick Star site, and then you had links to Best Buy or to Amazon
right.
or Sears or whatever, and you got paid a percentage. And they had this whole, it was just a multi-level marketing. Right.
Hmm.
Here's my point, though. He took his bias. He was right,
Hmm.
but he took his bias, and so in his mind, he's like, I'm literally meeting him in the year 2000. He's like, Jeff, every mall in America will be empty in 5 years.
Yeah.
Why would you ever go shopping?
Right.
You just have it delivered to your door. Now, most of us have experienced that's really kind of come true
Hmm.
with Amazon. It took 20 years to get there, 25 years.
Exactly.
We're all, if you're like my house, it's like, shit, why is there more stuff on my front door?
Yeah, every day, every day.
Damn
But,
it!
but all the malls are for the most part pretty much still here too. And the reason being is while he's a guy like most of us, I don't go shopping. I
Right.
go buy it when I know what I want and I go get it. I do my research on the internet. I make my decision. I go get it. The only time I browse is if my wife's taking me someplace and I'm trying to kill time.
So Jeff,
And you're hostage.
I actually heard today why that is. Women have a primal need to forage. That's why they still want to go to the store and walk around. They're just foraging.
Okay, so my point is though,
So that's why it hasn't changed, Jeff.
let's say that's 100% true. He took a
You need to plant a garden, and then she can go forage out there.
He took his introvert. He's a former military guy, very pragmatic, and he's like, I can get more shit done when stuff shows up on my front door. Therefore, I will never go to the store again. So no one else will either. And so
Right.
my point is, just because it makes sense on paper doesn't mean that inertia and fear aren't massive headwinds.
They
It
are.
will happen,
Yeah.
but the adoption rate, who knows?
Again, that's the main thing I've realized with new Bitcoiners or new people in crypto is they get it, and once it clicks, and you understand that this is a tsunami that will swallow up everything. But you have to let people get there on their own, because I remember in 2018 and 2019. I mean, it took me until halfway through 2020 to get some of my family members for it to actually click in, and then it was really what helped a lot was the COVID checks in 2020, when people just got random money deposited into their bank account and they really didn't understand why or where it came from. Like, what do you mean they can just put it in my bank account? How? They really couldn't wrap their heads around it. And that's really what opened up, like, okay, now I see what you're saying with this money supply thing. Now I see what you're saying. Okay, when you say my money divided by infinity versus my money divided by 21 million, like, I understand that math.
Yeah.
And then they were willing to buy that first $100 and test it. But yeah, fear is a big, like I really liked what you said, that you don't even use word correlated with, millionaires who you're working with, because, they don't, you're right. The people that are working and good earners a lot of times don't want to hear, financial talk.
Yeah, so like my biggest thing why Bitcoin is going to work is because it's hitting right at the right time. If you've read The Fourth Turning, if you watch Ray Dalio right now, he is screaming at the top of his lungs that we have about 3 years before real inflation is really going to start hitting, because the dollar, there is no other choice right now. Our nation has no ability to actually stop spending. The only way you can handle the spending that's going on right now is to print money. And the dollar is going to get devalued and devalued. And people are going to look for other places to put their money. And guess what? There's no other nation that it can be trusted. You can't go to China. You can't go anywhere else. So people are going to gold right now.
Mm-hmm.
And they're going to go to Bitcoin. That's what they're going to do, because that's the reality of the situation. Is you can't trust any world government anymore. All of them are irresponsible. The debt is off the charts everywhere. So people have to find a place to put their money, and it's going to be gold. Okay, you can have it there in the market. It's going to do really well, especially and probably for maybe a month or two. But because the federal government's refinancing $7 trillion right now, It is a huge problem. They're refinancing at a very high rate. And when all this kind of plays out, the reality is people know the dollar's dead. Where are they going to go? Where are you going to put your money?
Gold and Bitcoin, depending on your risk tolerance and your knowledge.
It's your safety stores. Like right now, I mean, stocks are too to a degree, but right now stocks are scary. Equity is really scary to put your money into because they're so overvalued.
Well, let me ask you this, Taylor. I mean, how do you see there being a way with tokenization and digitization of real world assets of either stopping the hemorrhaging or or saving, kind of saving the machine by making these illiquid assets more liquid?
Well, like if we can figure out this whole housing thing, so like right now, there's so many fees when you buy and sell a house.
Yeah.
That just eat away. You have to find a real estate agent. You got to pay a real estate agent. Most people do about 5% right now, but you're paying 5% there. You're paying $6,000-$7,000 to the mortgage broker to do all the financing part. Imagine if you can take a home and you can turn it into an NFT and you can make it an asset and then do what you want with it. Oh, do you want to be the bank yourself and sell your house and then someone just pays you as you go along? Or do you want to sell the whole thing? Do you want to have it? If you're hard up on cash and need money, you can just
I
go
mean,
online.
you can owner finance it.
Yeah.
You could take out a loan and like fractionalize it and sell it off like shares, or you could buy a rental property, and people can buy the tokens, however many tokens you mint for it, and they can buy basically shares of the house, and then when you rent it out, they get a dividend for
Well,
owning
yeah, and then
however many tokens.
and then you got to pay back the mortgage. You're paying back your mortgage, every month or however that you
Yeah.
design it, some kind of smart contract. And if you don't, it's set up in a way that an attorney will go foreclose on the house, just like a bank will do right now.
Well, and with a smart contract, they really wouldn't even need to, because it could be built into the smart contract to where if you default, then it just, the ownership goes automatically back to, whomever.
Yeah, and then and at that point, I mean, there's some laws that you have to overcome with that because in Texas, there's rights that people have to homes, but once you turn it into an NFT, then you've taken it out of being have to go through the system to buy it. Because right now that's how the banks make their money. The banks make their money. They don't actually lend the money. What they do is they charge all those fees to do everything, and then they just act as a collection agency, and then they sell it off to the federal government.
Well, that's what I was gonna say. I got one more thing, and then I got to run. But yeah, and that's kind of what I'm talking about when the sense of like it. We think about it from a retail level, but it's not going to get there for a very long time. But like you're saying, if you can get it to a form and easily, just like you can use NFTs to transfer liquidity pools and value and ownership that way, if you could get a mortgage representative as a tokenized asset, it's much easier to package up and resell. And to Taylor's point, that's a lot of where the money's being made, is creating the loan, getting the fees, packaging it with a bunch of other ones, and selling it. And these days that'll happen 3 times. You get a loan on a property, it'll sell 2 or 3 times in the first year you have that loan taken out, or if not more.
Well, isn't that what led to the 2008 crash?
It's a big part of it. Absolutely. Yeah. The mortgage-backed securities building up, and what they do is they package them up with a bunch of junk ones. And, and they, same thing. And what's so sad is they did that and then it stopped, it all came crashing down, and they immediately started doing it with college debt. And you can see all,
Oh yeah.
all the prices of schools going up, all the student debt going up like crazy. And it's just, because they need debt to make this whole system work. And that's unfortunately, that's I don't know if it was Jeff or Taylor that said it, is like with the situation we're in with the dollar. When you go on that Keynesian economic system, it will inevitably lead to a gigantic crash, if you don't ever let it pull back in a healthy way.
But imagine, like exactly what TJ's saying, like imagine how much money can be made in DeFi when all that's out.
Mm-hmm.
And it's you're lending your Bitcoin, you're lending your whatever crypto you have out for these people, and those mortgage payments now are coming in, and you're literally just getting paid. You don't
Yeah.
really, you don't do it. You don't have to worry about gathering all those fees now. One, it's going to be way easier for people to buy and sell homes. It's going to cost them way less to do it.
Mm-hmm.
But the money now is not going to be made by the banking industry. It's going to be made by people that are putting it up. Now, I imagine the banks are going to figure it out and try to do whatever they can to cut all of us out of that process. But, if they don't get on this board and people figure it out, banks are gone. They're done.
Mhm.
Like they are no longer going to be used, because right now you're saying, hey, you can go borrow for how much? It's 2%.
Well, real quick, I know TJ, you got to go. Appreciate you, brother.
Yeah,
We'll
no,
definitely
thanks
have
for
to do
having
it
me. It was a
again.
good time. Nice to meet you, Taylor. Nice to meet you, Jeff. I always love talking crypto. I just got to get the kid to bed, or the wife won't be happy. So
Yeah.
it won't. Doesn't matter
Let's
how
do it
many
again another
houses and
time.
how much DeFi you do. If you
Yeah,
don't,
DeFi doesn't fix that, so
yeah,
you need
no,
to go take care of
exactly.
that.
But
Yeah.
absolute pleasure. Have a good one, guys, and we'll see you at the top.
All
All
right.
right. Thanks, TJ.
You were. I think
You
for
were
us.
saying, Taylor. Sorry, I know I just know he had to go. I just
Yeah,
wanted
but
to.
yeah. So let's go along this idea. So
Okay.
you got to think of all the little fees that are made during the process that now could be made by those who are offering up maybe their Bitcoin. But like right now, if you could get some system going, if you can go on, figure out a way to go borrow at 2%
Hmm.
and figure
Well,
out
I mean, it's less than that right now on Aave. I mean, hell, you can borrow. Well, you can borrow USDT for 3.8, USDC for 4.6, but you can borrow against Bitcoin, Coinbase wrapped Bitcoin for 0.24%.
Yeah.
yeah,
Okay. But you're borrowing. To be clear, that's a secured loan.
yes,
Oh, of
buy your
course,
Bitcoin.
of course. Yeah.
Right.
Yeah,
Well, the vast majority of people that are borrowing from banks are borrowing unsecured loans. That's where you got to
well,
figure something
no,
out.
no, not
Well,
for mortgage.
but
Mortgages
but to
are
Taylor's point,
7.8% right now.
what's that?
Mortgages right now are 7.8%.
Right. But
Well,
Bitcoin is liquid in an instant. Your house is not.
Yes,
well,
but
but
what I'm trying to
to
say is,
Taylor's point, real quick, to Taylor's point, if you tokenized your house and you used that for the collateral, you could take out a loan in Coinbase wrapped Bitcoin for 0.24%. You could convert that, you could swap that for USDC, cash that out into whatever fiat you wanted or whatever, and you have a loan for 0.24% on your house instead of 7 or whatnot.
yeah, if this could get figured out, man, this is huge for people.
100%. So I think I think there's two places where this is huge. I think it's certainly on the retail side, retail mortgages, real estate in general, but certainly retail mortgages. But another place where this is huge. So I don't know if you guys. So I don't know how much you paid attention to it, and I'm not even going to go down the rabbit hole, the commentary of the whole Trump versus Harvard thing that happened,
Yeah,
Yeah.
right? But
Yeah.
because of that, and I think Harvard made the right decision in saying no because they're a private institution. And on the flip side, I understand why Trump's like, well, if you're not going to do it our way, you're not going to get our money. Which I mean, I can kind of see both sides. But here's my point: because at least at this current juncture, Harvard's like, no, thank you. Now they got to come up with cash. And a lot of their endowment is illiquid. And,
Oh, okay.
and
I
a
know they have
lot,
billions in an
ton of their
endowment.
endowment, it's private equity, it's private debt,
Oh,
it's
okay.
land. They own swaths of, like the great Northwest is timberland. And that's not something you could just sell on a dime without taking a massive haircut. And
yeah,
Unless
so
it's tokenized.
but when you tokenize it, Jeff,
that's what I'm
as long,
saying.
as long as there's
Demand.
a demand out there, in which there will be if it's DeFi. I mean, if somebody is paying into their mortgage and you're making fees off of that system, people are going to do it. Because you can include literally everything into the whole process, where it's not just you're buying the house, you're also acting as the insurance on it. You could put all that. Insurance companies could come in and go, hey, we're going to put this all in there, so the money that's going in there is going to insure. So you're making fees, off of the insurance payments that are being paid every month. All these things could be tied up into these smart contracts where all the middlemen are gone. Now that sucks for thousands and tens of thousands of people. That's how they make their money. Like me with the title company, that's going to suck when that happens on that side. But overall in the system, that is so much better for everybody else. And it's going to be the people who see that as the opportunity and are investing in that. Well, that's where the money's going to be made, is at the beginning. Because the people that will come in and go, hey, yeah, I'll loan money out to, these mortgaged back crypto pools.
Mm-hmm.
So, but Jeff's on his cell phone. He gets
I'm
a little.
Hold on, I'm getting you a quote.
Okay, give me a quote. I need to hear it.
Hold on.
Oh. So to get where crypto would have to be the same market as gold. Gold's at 23 trillion. So we're only about 20 trillion off. Where then Bitcoin will be equal to the same
yeah,
market.
no, it definitely has some some ground to cover, but I mean, but look at it,
Whoa. That means there's
gold
10
has been around for
trillion more
thousands
that
of
can go in.
years to increase in value. Bitcoin's been around for what, 15-ish?
Yeah, that's 10x size that it can still grow and to be equal to the gold. That's exciting if you're looking at it as a market, as if you think they're going to be the same.
Well, and I think, and me personally, the thing that I see where gold has an advantage, or not gold, where Bitcoin has an advantage, and I don't own any Bitcoin yet. I see faster horses that I want to make my money off of, and then I'll buy Bitcoin to store that wealth. But the thing I see with Bitcoin is that it is digital and it's highly liquid. So you can buy it, sell it 24/7, 365 online, couple of clicks, done, done, done. Whereas gold, like, and I own physical gold and silver, because if the zombie apocalypse comes, I'll have something I can barter with, and all that stuff. And it's a great store of wealth, and it's not on chain, it's anonymous, all that kind of stuff. But with Bitcoin, again, you can have Bitcoin in a cold storage wallet, and you hit a hard patch, and you need some money, you can cash that out, or you can have it in DeFi, earning yield, and augment your income, as part of your retirement. So, that's why I'm always poking Jeff that, to learn this, because I want to turn you into a unicorn, to where you're one of the few people that are steeped deeply in TradFi and highly knowledgeable in DeFi, and you're able to service your clients with both with all these different yield bearing assets, and better balance their portfolio.
Well, I want to do, and I appreciate that. It sounds like you want me to be horny, though. That's kind of weird. But,
Well, I want to start an OnlyFans, and have you be on there with what was that? That was Shane Gillis, where he did that skit where he's riding the Sibian. He's like, "Oh, this is my second job, so I can put you through college."
so what I was looking up when I was called out so rudely by my friend, I asked a question because I remember seeing this and I wanted to get the numbers right. So since like I just picked 1976 because I was born in 76, but the financialization of the U.S. economy has grown at a much, much, much greater rate than virtually any other sector, except for maybe like the computer, internet, semiconductor kind of space, telecom space. And so, like in 1976, basically it depends on what measure you want to use, but like the more hard measure based on census was like 7.5% was finance and insurance. Real estate. No, sorry, excuse me. 4.5% was like finance and insurance. 9% was real estate or rental leasing. Came out to be like 11, 12% of the economy. Now it's like 21. And if you count like derivative industry, so for example, one of those furniture stores you always see, we get 0% financing for like 5 years, right? I can't think of
Like Rent a Center.
Rooms to go, right? Whatever. Like, really, that's a financial company because 98% of the people that walk in the door are borrowing money to buy the product. And if they can't get
Well,
people
and
to borrow the
that's where
credit,
they're making most of their money.
right?
They're
And they're making
selling
most of
shit
their money
furniture,
because,
and they're
oh,
making
I'm
their
late,
money
I
off
late
the loan.
fees, or I don't pay it off in time, pay the minimum, then I get the back interest rate charges. And so, and those things aren't considered in the traditional finance sense. So really estimates are closer to 30% plus of the economy, right? And our economy is now, I think it's 36 or 29 or 30 billion, 30 trillion a year is our GDP, or maybe it's 36 trillion, something ridiculous, where it was, I don't know, 3.5 trillion in 1976. So you have this massive, massive, massive pool of people that either directly or indirectly make their living, basically what Taylor was talking about.
Yeah.
The middleman, the fees, the layers, they're not really doing anything, right? They're not a plumber that fixes a problem. They're just sort of
They're just rubber stamping things and
rubber
passing it
stamping and
along.
moving paper and money
Yeah.
around. And so I do think I am not naive to
I'll be right back. I just gotta grab a drink.
to the massive opportunity of DeFi. But I think it's sort of like, in 2020, in 2002, MCI WorldCom was the largest telecom company in the world and became the largest bankruptcy ever. Like, it was way bigger than Enron. And nobody thought, but if you told somebody in 2000 MCI is going to be gone,
They'd
WorldCom is
laugh
going to be
at you.
gone,
Yeah.
Netscape's going to be gone.
Oh,
You know what I
Yahoo.
mean? No,
Yeah.
so trying to figure that out is really difficult, I think. But it doesn't mean that there's not going to be massive innovation. So there will be. I mean, somebody is going to be the first DeFi, Bezos level billionaire, right? And there's probably going to be, I think, dozens of them potentially, right? Depending upon whoever corners the market for real estate mortgages, whoever corners the market for. So I think a huge thing is alternative investments, right? Because the big risk of alternative investments for the retail investor is they're illiquid. And you want them to be illiquid because that actually offers some what's called illiquidity premium, right? That gives you a
Yeah.
little bit better return theoretically because of that. But if you could put a DeFi back end, even if it was like delayed, if you say, hey, 2 years, we're going to lock your money for 2 years. Then after that, we're going to issue tokens. It's going to be tokenized, and you can sell your tokens for whatever you want. Now, remember that the tokens may trade at a massive discount to what we think the intrinsic value is of this investment, but it gives you an opportunity. There's a lot to be said for that.
Well, there is, like with smart contracts, you can pretty much program in whatever you want. So I mean, there is, like delegating and staking to where when you stake, it's locked for a period of time. You can do the same thing with smart contracts to where, like, say you tokenized the house, fractionalized it and, sold it off to 100 people. But you wrote into the smart contract as part of that full disclosure that you can't sell it or whatever for a year, 5 years, whatever. And so that's the great thing about smart contracts is it's basically just like a written contract. You can put anything you want into it. But it's trustless. So there, like you said, there's nobody that has to rubber stamp it. There's no room for error. There's no room for fraud. If the money doesn't release to the seller until this happens, this happens, this happens, this happens. So that's the great thing about it is it's just so fast, so fluid, and again, I can't stress it enough that it's 24/7, 365. Like, about trading stocks. If the stock market isn't open, I mean, you can put an order in, but nothing's gonna happen with it until the bell rings.
Not for us, yes.
Yeah,
It does for the
it,
big banks. They do dark pools and all kinds of crap. But yes, for
and
us
that's
peons,
what
no.
well, and that's the great thing about DeFi and crypto. I'm glad you bring that up. Is it really is like it levels the playing field. So I actually did a video the other day that talked about a roundabout way that you don't have to be an accredited investor to invest in the new Biddle fund that BlackRock is doing with Securitize because you have to be an accredited investor. So what I did is I dug through Securitize's website, found which blockchains they're using to build this out, and basically was telling people on the channel, I'm like, if you're interested in this, not financial advice, of course, but you can invest in the crypto projects that are actually the infrastructure that this fund is built on. So it's a roundabout way that you can invest in it without being an accredited investor.
Yeah. Well, here's like, I mean, think about this, that you could really absolutely change people's lives. You're able to turn your house into an NFT.
Mm.
You're paying on a mortgage. Okay, fine, great. You have, but what if every paycheck you got, you could put right into your home, 100% in, and you have a card,
Mm-hmm.
and whenever you need to pay your bills or anything, it just comes back out. So your money is always going towards paying down your debt, and is
Mm-hmm.
paying down your debt as max as it can every single moment. But when you need money to pay another bill, it's easy to get the money out.
I've actually heard of in a different way people doing that now, and it shaves like 10 years off their mortgage.
Yes, like it would make it so much more efficient. I mean, of course, banks don't want this. I mean, the banking industry is not going to build a platform like this. But when people get together and figure this out and go, hey, let's build this system where people can do this. You can just put it in and you have a card and you go out and, buy whatever you need to do. And it's just pulling that money out and put it in your bank account when you need it.
Because isn't it a HELOC that people are using right now?
Yeah, a lot of people do it like with a HELOC or do something along those lines. But I mean, you have to go in, pull the money out, put the money back. Like you got to do all that. If it's
Yeah.
all automated for you, it just
Oh
happens.
yeah, no, yeah, much more efficient. Absolutely. I was just wanting everybody out there to know this is something that you can do right now. But yeah, once this matures, the digitization and smart contracts and things like that, then
But you
yeah,
have to spend $8,000. I mean, well, I guess HELOCs aren't that much. It's just like $2,000. HELOCs are, but you still got to pay $2,000 to set that up.
mm,
It's these, but like I think that in the future, that's how everybody's just going to go. They're just going to have their house be tokenized, and it's just going to be like, well, yeah, I'm paying on my house, but my whole check just goes in there. But when I need it, I have my card, and it pays for whatever I need to pay for.
yeah.
I
Well, I
think
mean, I know it's something that I would that property I have in Hawaii. I want to tokenize that because I want to basically be able to get investors to where I can get the money to where I'll use that money to put like the tiny homes and stuff on it that I can rent out, and then it's no money out of my pocket. And then when Airbnb people show up and that's all getting paid, then it pays those people back, and
Yeah,
then eventually when they're all paid back, because I own it free and clear, um, then whenever I pay those people back, then I just own it outright. So it's just a way for me to be able to develop that property without having to come out of pocket for anything.
do you guys know what REITs are? Real estate
yeah,
investment trust, right?
I
So
don't.
there's something called closed-end REITs, which means they've raised the capital, they deployed the capital, they bought, let's say they bought a bunch of storage units or apartment complexes or retail shopping centers or whatever they bought. And the shares are traded on exchanges, but generally speaking, they trade, and I don't know what it is this year, but let's call it pre-COVID, they would trade at like 6 to 10% discount to the actual. So if we had an appraisal that said the fund's worth 100 million and somebody could instantaneously go out and buy all the shares at once without moving the market, it would cost about 92 million to buy all the shares where you would own 100% of the fund.
Yeah.
And the reason for that discount is the lack of the lack of liquidity, of the fact that the underlying, what gives it the value, is still a very illiquid thing.
yeah,
And so I think that's the closest approximation to how DeFi might work. And then the more and more and more comfortable people come with the coins, and the coins being, or the tokens being liquid, the less and less discount that would be for the most part. But the one thing you have to understand though is like in Taylor's example, which I think is brilliant on a lot of points. But if you had the tokenization of your house, so one of the best things that happens when people buy a house, unless they have to move in times of economic distress, so think in 08, 2022, the very beginning of COVID, unless you had to move and you happen to be in a house, especially when you got a low rate on your mortgage, you probably didn't think on a moment to moment or a daily basis about the price of your house.
yeah,
Right. I mean, realistically, if I had got back when I got the paper, I got the paper in '08, and when we were going through those massive crises, especially the second half of '08, beginning of '09, if my paper came with a special insert of here is your sundown price, here is the price that you're reading this at 8, 6, 7, 8 o'clock in the morning that you could for sure sell your house by the end of day to day, that might fluctuate on a 150, $200,000 house. That might fluctuate 30% any direction from day to day, right? Maybe more. And people would have panicked about that the same way they panicked about the portfolio. So the one comment I would make is where this becomes interesting is, okay, so let's say I put my money in to the house like Taylor's talking about. And for whatever reason, there's a shock to the market. Houses aren't worth what they were worth before. People don't want it as much. Like, well, am I now trading little bits of my house? Do I have to trade a lot more of my house, if you will, to go get that steak dinner or go get those groceries than I did before? So I do think,
Jeff, think about it like this. So you have your house, okay? Like this is the representation of your house. You're converting this into an NFT. Other people are buying into your home when they give you money. They become your mortgage. Basically, when you pay your mortgage on that house, let's say you do it 100%. You go get just like a traditional, and they in the system they're saying, hey, we want you to have at least 20% equity. So you're taking that more. As you make your monthly mortgage payment, you're paying all those people automatically through those smart contracts,
right?
and it pays them. The whole reason this gets difficult is the fact that Jeff decides to stop paying his mortgage. There has to be a system now set up where somebody goes, and because you turn this into an NFT, technically you don't own this anymore. It's owned by the group. You're renting basically your home.
Sure. No, I get that. But what I'm saying is the value of the NFT itself will fluctuate on how attractive houses like mine are that moment, that day.
Well, yeah, because that's the risk that's taken is like if all these people come in and say, hey, you got 10,000 people that have loaned their crypto to you to do it. I mean, this house might not sell for the amount to get them all paid back. That's a risk that they're going to take in the pool. So I imagine the first round that this is done, this is only going to be like 50% of people's equity. This is going to be like first done on homes that people own outright, but want to get money out.
Okay.
And so that's going to be the first kind of thing. And as things become more solidified and you're doing this more and more homes, well, companies are going to be, or pools will be willing to take more risk and go, we'll give 80% to get more people to turn their houses into NFTs.
So I do. So the other thing is I forgot about the part where they're taking it to USDC if you're the homeowner. So I really like that. I just think that I'm just saying that there is a psychological aspect to taking what is a non-volatile asset behaviorally and creating volatility and making it peeling back the curtain where you see the volatility it has. So like perfect example is there's something called the TLT. It's an ETF that tracks a basket of 20-year bonds, right? Yeah. Government bonds, safe, guaranteed by the government, right?
Yeah. TLT,
but the difference is if I bought if Grandma Joe buys a 20-year bond in 2020 that paid a whopping 1% a year,
yeah,
she's going to get her 1% every single year. In 20 years, she's getting her money back. I mean, at least that's how it's always worked before. Well, knock on wood.
Yeah.
Let's assume that's the case. Her experience as someone who took a bond and stuck it in a safety deposit box is no volatility, no risk.
Yeah.
Right? But if she bought the TLT ETF,
yeah,
because now new bonds are paying 5% or 4% for 20 years versus
devalue
versus 1%, that bond fund, because it's priced on what you can sell it every day at, that bond fund is down 48% since the spring of 2020.
Yeah.
So same exact asset, but one is monetized for liquidity and one is not, and the difference in value is insane.
So let's loop that back into our topic where, with tokenization and digitization of assets, how could making everything more liquid mitigate that for your clients?
I don't think it does. It increases volatility because what you're doing is you're giving the people that bought into the tokenization, that invest in the tokens of your house. I think that's how you call it, right? The tokenization.
Yeah.
They bought those tokens. They have the ability by trading it on other markets now to set the price of what those tokens are worth. So theoretically, so here we go. Let's say one person bought half your cabin, Mike, and let's say for grins, I have no idea, but let's say your cabin's worth $500,000,
No
right?
one is buying my cabin.
Right. So
Taylor gets it when I die.
So 250 grand is what this person put in because that was what your appraisal was. He bought 250. But then if that one whale all of a sudden finds out that, I don't know, his wife's doing something crazy and he's got to dump everything in a day, he might only be able to sell it for 160. So at least for a moment, it looks like your house is worth a whole lot less than it was. Now, you don't really care because what it can trade for on the token market is completely different than what you can get a buyer to pay for on the real estate market. But if you want to measure your price based on the tokenization value, that's going to fluctuate tremendously based on how much liquidity there is in any given moment on your home.
Yeah, well, it's the liquidity that's out there because the reality of what's at the beginning. Because I imagine the first round when this is going to be done is going to be closer to the rates of what mortgages are going for right now. But there's a big difference with like the TLT and all that you're talking about, because what you're talking about, Jeff, is the government controls interest rates. So they can change the value of those treasuries.
To some degree.
In this world, there isn't a government that can come in and go, oh, we're raising the interest rates now on how much it's going to be to loan money. The market's going to set it.
Right. Okay, but let me give you a perfect example. Yeah, that's my point, though. The market's going to say it. But let's just say for grins, let's get a time machine. Somebody tokenized, their bar on Bourbon Street in, early 2005, and then Katrina hits. What those tokens are going to be worth after Katrina hits.
You don't understand yet how it works. It isn't going to be one thing that people buy into. It's going to be millions and millions of NFTs in a pool.
So just like the way they packaged up mortgages before with the CDLs.
Exactly. That's how it will be done. And so when you're buying into this pool, you're buying into 10,000 or million homes. So if one guy doesn't pay his mortgage, it don't affect you at all.
I have to get my power cord. Keep talking.
Okay. So like that's the reality of the situation. How it would work at the beginning, you have to start it off and get it going, and it's going to be a few houses and not very much. But over time, what's going to end up happening is those pools will be huge.
Yeah,
and the power of it is like right now, of course, like what Jeff was saying, these ideas are already done. REITs, they exist. But the problem with the REIT,
they're just not tokenized and digitized.
Yeah, but with a REIT, this is what happens. Everybody pays their mortgage. It goes to the REIT company. They got to pay all their employees. They got to pay everybody. They got to take their cut, and then they send you the dividend. Mm-hmm. And the dividends. I mean, the dividends can be nice. I mean, you can get well, they depreciate it and stuff. Usually it's around 4 or 5% that you make in a REIT. Like that's a reasonable expectation of what you're going to get. I mean, some will pay more, but really they're not paying more because they devalue.
Make that in a day in DeFi.
But like what you're doing in this situation is you're basically able to do all of that with no middleman. You're basically
Jeff makes that in 5 minutes on freaking Grinder.
But sir.
But the other thing is like you not only don't have to wait, but you don't have to wait to get paid your dividend every 3 months. You get paid every day.
Yeah.
If that money comes in, it's distributed out.
That's what I love about DeFi is I have full control over my liquidity. If I want to leave it in a pool, if I want to take it out of a pool, if I want to harvest, if I want to compound it, if I want to, take all the yield from all my different pools, open up new ones. I mean, I'm I'm my own financial advisor. It's like, there's risks to that. I need to make sure that I'm knowledgeable and I keep my emotions out of my decisions and things like that. But again, I mean, I'm treating it like a small business to where, I mean, I get up in the morning, I have my tea, get online, see what the markets are doing, watch the news and stuff like that. And, there's a couple websites I use and I look at where the volume's at, where the, because volume equals, profit basically. And wherever the volume's at, I'm like, all right, if I'm going to open a new pool, I'll put it there, because I have it scattered all over the place. And so, as it moves, like, this might be earning a lot right now, but when the volume moves to like another chain or another platform, it's like, okay, well, I got some pools there too, and I got some pools over here, and I got some pools over here, and so something is always making me money,
Right.
and that's what I love about it. And like I said, I mean, I look at it more often than I probably need to, but it's because I'm learning about it. But yeah, like I said, it's DeFi. DeFi is I can't. I mean, I can't stress it enough. Just what an opportunity it is, and
Yeah. But
people need to find it on their own.
basically, Jeff, what I'm trying to say is you can do what REITs do right now with no middlemen, and you get paid instead of every 3 months, you get paid every day, every moment a mortgage is paid.
No, I totally get that. I just didn't realize you. I was thinking you were like going to literally have people investing in Taylor's house.
No,
In
yeah,
which case, if a people are like,
Well,
oh crap,
you
a hail,
can.
you instead of it being a million Taylor's homes,
yeah,
which would diversify much more.
yes,
Well, I mean, both are possible, and
Yeah.
that's the thing is, like I said, I mean, I can tokenize, that Hawaii property, and anybody that's willing to provide liquidity, if I put it on a marketplace, and was like, hey, I have 3 acres on the Big Island, Hawaii. I want to, develop it, and I can have my little prospectus or whatever the hell you call it,
Yep.
business plan. And basically, anybody that wants to provide liquidity to do that could from anywhere around the world. And I could do a smart contract and they provide liquidity. And for that liquidity, I guarantee that, the X, Y, and Z is going to happen. And so, I mean, yeah, I mean, you can do it on an individual property, but absolutely. I mean, it definitely would take a lot of volatility out of it with what Taylor's talking about, where it's a basket of properties.
But I mean,
Because
again, granted, it was levered to the moon, but that is what blew up real estate in '08 was
absolutely,
baskets of loans that didn't have had derivatives on them, that didn't have derivatives on them. The only difference for what we're talking about and what they're talking about is you had to go through investment banks to get it, and it was packaged in secure, funds, and it wasn't there was no smart contract element to it, right?
Mhm.
But well, and there was also fraud, right? They deliberately made things look like AAA paper when it wasn't. Um, which I think that smart contracts could do a really good job of helping you with that, right? I do think that.
Yes.
I think you would have a much more accurate valuation because you would know exactly what each piece was. Whereas this is
Well,
an absolute, everybody can watch The Big Short, figure it out. But
yeah.
the reality is it's sort of like if Bill Gates joins the chat right now, on average, the host of this show are worth 40 billion or whatever, right? But he leaves, it changes completely. That's what they did is they put some stuff that was AAA rated and made it cover up a whole bunch of ugly crap. So I'm
well,
not saying it's the same exact thing, but I do
yeah,
think that
Jeff.
there's
Like right now, if a hedge fund figures this out, they could just go buy a REIT right now and turn it into DeFi.
yeah.
They could go convert the whole thing over, just one big company.
And I mean the reality is what's keeping it. Nobody wants to be the big guinea pig from a regulatory standpoint where they get hung out to dry going, hey, yeah, you tried this thing, but for whatever reason it didn't work. And retail investors, they just golly gee, they didn't get it and
Yeah.
have to write a big old check.
Yep.
Right. That's why I think right now you're just now seeing ETFs move into Bitcoin because the argument is, well, you're buying this asset. And if Bitcoin goes up or Bitcoin goes down, that's not on us as JP Morgan or as Merrill Lynch or as whoever we are. Like we're just giving you access to a securitization of this asset class, right?
Yeah.
So it'll be interesting. But I mean, I think you're 100% right. And I think there's going to be tremendous money be made, and I wouldn't mind being on that train. I just it's a heavier lift than you think on the
Jeff,
legal
Jeff
regulatory
said
Oh
he
yeah,
wants to.
huge.
Jeff said he wants to be in a train.
side. Well, you know,
Hey,
Uh,
I'm just saying. I'm not saying it's a bad thing.
yeah,
So
I
no,
do.
so basically, I mean, let's. I mean, I guess we could go ahead and wrap this up.
I was gonna say I'm expecting a call shortly, so I got to go.
Yeah, yeah. So go, Taylor. Go ahead and give us some closing thoughts on tokenization.
there's so many possibilities right now. That's the real. Once you realize like what's going on, learn it, and it definitely is. I mean, as long as our society keeps going, it's where things are going to go because it is where you can make money, and the reality is that's where money goes.
Mhm.
And so it's going to take time, just like everybody said here. I mean, we're years and years into this, but it's accelerating because now with AI, like one of the things that made me be okay getting into this was the fact that I could take those smart contracts, put it into ChatGPT, and say, "Tell me everything that all my risks here," and it outlined here's like, and it went, should I put it in this one? No, because it's not audited, by anything.
Yeah, yeah.
And so that was, I mean, in all honesty, that's the thing that cleared up because I didn't want to sit there and have to read the whole contract and then try to figure out everything. But AI made
Dude,
it easy for
you're
me.
you're the one that's like kind of mastered the AI thing and got me on it. But sorry, go ahead,
But yeah, I mean, right now that's so easy to do.
Yeah.
Jeff.
That's my thoughts.
No, I'm just sitting here thinking about how to tokenize millions of pieces of real estate all at once and make a piece of that pie, right?
Well, I mean, honestly, I mean, what you need to do is, I mean, we need to schedule a call, and I can, start doing some screen shares and stuff like that, and just, get you at least spun up on the basics of, of how all of this works. Because if for not for anything else, the smartest thing for you to do would be once you know the basics is put a little bit of money into it, play with it, you know, and then as you learn, then scale it up. Because I mean, I know the way that I learn is by doing. So I can explain it to you, I can show you, and then whenever you're comfortable, put a couple $100 in, and then once you feel like okay, yeah, okay, I got the gist of this. This is how you deposit liquidity. This is how you pull it out. This is how you harvest yield. All those sorts of things. Then you can at least go from there. At least you're going from a place of knowledge and not just this me and Taylor talking your ear off about it.
Yeah. No, that sounds good.
So yeah, let me know.
All right.
So my closing thoughts on this is most of the people that are listening, they know, and obviously, I mean, I have a YouTube channel where I talk about DeFi quite a bit. So that I'm very much a proponent of RWAs, tokenization of real world assets, decentralized finance, earning yield, because in my opinion, I don't like any money or fiat sitting in the bank because if it's sitting stagnant, it's devaluing. So I put all my money to work, either in real estate, in DeFi, in crypto, in whatever, gold, silver, uh, assets that appreciate. I highly suggest that those of you that are listening go out and start learning about this stuff. I'm not saying throw money in it, learn about it because it is going to be a part of the future financial system. There is legislation actively bipartisan. One of the few times I've seen in recent times, bipartisan legislation being drafted that is due to be signed in August, if all goes well, into law around stable coins and crypto and DeFi and all these different things. The SEC just met with Ondo, one of the assets that I own, and they discussed tokenization of stocks. It is happening. It's not if, it's when. And if you're not knowledgeable about how this stuff works, you are missing out on a huge opportunity to one, make money, and two, passively, passive income that you can make while you sleep, while you work your regular job. take care of the house, do yard work, sit on a beach, drinking a pina colada. You can be earning yield.
You can
It's
tokenize
basically
that pina colada, and people
you
can
can,
make money while you do it.
right? So basically, I mean, that's kind of my point is that you can get to a place with DeFi potentially to where it's a small business with no overhead, other than taxes. You don't have employees, you don't have a brick and mortar, you don't have a warehouse, you don't have stock, you don't, have insurance, you don't have any of these things, and you can run this like a small business. That's what I do. Oh, there's Jeff.
I have no idea what
So, so I'll close with that. I want to stress the importance of at least becoming knowledgeable about this, even if you don't invest in it. Anything else before we go?
No.
All
See you
right.
guys next week.
See you next week. Till next time.
Till next time.